Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Before I go any further, I want to make an announcement. Bookmap is hosting a webinar tomorrow. This is at 11 a.m. on Thursday, 11 a.m. Eastern Time. I'll show you more information in just a moment when I finish my introduction. You can go to this link. Again, I'll show you the link in just a moment. Or you can scan this QR code with your phone for more information. So more about this in just a moment. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics in my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks that I trade and follow, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset, and setups in an asset can be taken with futures contracts, shares of stock, or options, depending on that asset. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Robert. Welcome. Glad you're here. Here's my agenda for today, Wednesday, June 26. First of all, I want to go over news items, economic data, and events for the rest of the week. Then I'll go through my positional analysis for today. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with news items, economic data, and events. Nothing today, but tomorrow at 8:30 a.m. Eastern Time, the durable goods report and the GDP report, again, come out at 8:30 a.m. Eastern Time. Then on Friday, the big data release of the week at 8:30 a.m. Eastern Time, PCE data. And then at 10 a.m., Michigan consumer sentiment. All right, so the big release for the week is PCE data on Friday morning, and we'll talk about that on Friday afternoon. Also, there are a variety of Fed speakers throughout the week. All right, so that's news items. Let's move on. And let me wrap up this event for tomorrow. Here's where the link sends you. Again, tomorrow at 11 a.m. Eastern Time. Free live workshop. So you can read over the information there or click on the link for more information. All right, let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES futures and Bookmap. Before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the underlying index, SPX. We've all seen this chart before. Big rally began last year. Correction began on April 1st this year. And then the rally resumed the Monday after the April options expiration. And a little bit of a pullback after the May options expiration. That's shown with that red vertical line, the dashed red vertical line. A little bit of a pullback. And then the rally resumed now up to the June expiration. And it looks like there's a little bit of consolidation beginning a couple days before the expiration, now continuing. All right, so the expiration dates, the big monthly options expirations, are often key turning points in the market. All right, that is the one-day chart for SPX. This is Thinkorswim. Let's take a look now at a 1-hour chart. This is a 30-day 1-hour chart. It may be difficult to see, but this is the the June options expiration. So consolidation so far before and after expiration between right around 5450 and 5500. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. I get this from an options chain. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. And SPX is trading right in the middle of both ranges. And note I do post those daily expected moves, weekly expected moves in Discord every day the evening before. All right, so there's the consolidation going on again between right around 5450 and 5500. Let's take a look at now at the Spotgamma levels on this chart. These are the dark red lines. And these are shown, these are available to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim, a 1-hour chart. I'm going to point out the key daily levels. First of all, here's the put wall at 5,300. That's a strike with the largest net negative gamma that can be expected to act as support. The next level up is the volatility trigger at 54.45. That is Spotgamma's proprietary volatility flip level. Below that level, our market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that leads to smaller trading ranges, less volatile, more range days rather than large trend days in a positive gamma environment. And for SPX, gamma notional is slightly positive, but still SPX again trading above the volatility trigger. And the next level up is 5,500. That's the call wall. That's a strike with the largest absolute positive gamma that can be expected to act as resistance. That is also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. Note that level did move up pretty substantially from yesterday. For the last 2 days, just after expiration, the absolute gamma strike moved down to 5,000. And today it has moved back up to 5,500. So levels starting to stabilize after the Friday options expiration, the big June options expiration. All right, let's wrap up our view of SPX with a 1-minute chart. No SPX spot gamma levels in play for today. This dark shaded portion to the right, that is the regular trading hours for today. Note yesterday, SPX found support right above the 55.45 volatility trigger. This is the lower daily expected move for today. It was different yesterday. So SPX trading in a narrow trading range today. No SPX spot gamma levels in play for today. Let's take a look at a SPY chart. We zoom in. This is a 1-minute chart for SPY. Again, dark shaded portion is the regular trading hours. So this morning, SPY found support right around the 543.0 gamma level. Resistance just above the 540. That's a large gamma level. And a lot of price oscillation around the 544 volatility trigger. Just recently acted as support. All right, so there are SPY spot gamma levels in play for today. So now let's go back to Bookmap. In Bookmap, I have my own cloud notes. Shown on this column here, so I can show SPX levels. This was not shown on the chart that we just looked at, but it was noted as a resistance in the spot gamma support in the spot gamma AM founders note. Looks like just recently it's just right above that 544 large gamma 3 volatility trigger acting as support. So again, I have SPX levels on this chart. I have SPY levels on this chart, and then key ES levels. S&P 500 trading in a pretty narrow range today, so those are the levels in play for today. Again, primarily SPY levels. 543.0 gamma level acting as support, and then the 545 large gamma 2 level acting as resistance. Note there is a difference in price between ES and SPX. Today is right around 65 points. So I'm showing ES minus SPX at 65 points. So this 54.62 level, SPX is at ES 55.27. And I do post those index relationships that I'm using every day in Discord. All right, that's the S&P 500 levels in play. We'll talk about setups in just a minute. I talked about shifts in levels for the SPX. Again, the absolute gamma strike large move higher from 5,000 to 5,500 today. That was the only shift in levels for the S&P 500. No shifts in levels for SPY. All right, let's move on to NASDAQ. This is the NQ futures and Bookmap. Let's take a look at the underlying index charts. I'm going to go to QQQ first. This is a 1-minute chart for QQQ. Give me just a moment. All right, so the 0 gamma level, 478, acting as support. And then the volatility trigger, price finding support at that level. And then 480 is the absolute gamma strike. So pretty similar picture to SPY. Let's take a quick look at SPY again. So just like QQQ, 543 0 gamma level acting as support. And again for QQQ, the 478 0 gamma level, and price oscillating around the volatility trigger. All right, so that's QQQ. Those are the levels in play. 0 gamma level, volatility trigger, and absolute gamma strike. Let's take a quick look at NDX. $19,750 is the absolute gamma strike. Also the call wall acting as resistance. So there are some NDX levels in play for today. All right, let's go back to Bookmap. So again, I have my cloud notes in Bookmap, so I can show NDX levels. There's that 750 absolute gamma strike call wall. Between that level and QQQ 481 acting as resistance. And here's the QQQ 478 0 gamma level acting as support. There's the 479 volatility trigger. I also have the big round numbers. Those are shown in red for NQ, 19,900, 950, and 20,000. Or we'll talk about setups in a few minutes. All right, let's wrap up our positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. For the S&P 500 and NASDAQ, these numbers all did shift higher from yesterday. So gamma notional for SPX was slightly negative yesterday, shifted to positive. And still negative for SPY, but less negative than yesterday. And pretty much neutral today for the NASDAQ, NDX, and QQQ. So overall, this picture of gamma notional is pretty neutral for the day. All right, so based on this, I forgot to mention shifts in levels for NASDAQ. For NDX, the volatility trigger shifted higher. And for QQQ, the volatility trigger, put wall, and call wall all shifted higher. So a bullish hat trick for QQQ. So based on that, I was bullish for the NASDAQ especially, and I guess slightly bullish for the S&P 500, but more bullish for the NASDAQ, and really looking for a moderate price action, this consolidation after expiration to continue. All right, so let's move on now to setups. So the information that we've looked at so far is based on static data. Spotgamma takes open interest data, applies their algorithms to come up with the levels that I apply to my charts. That is my positional analysis. Now let's move on to execution, move on to real-time data. And as always, I'm going to start with the S&P 500 by taking a look at what options traders are doing today. All right, for the S&P 500, let me zoom out. For the S&P 500, there are two signals that we can take a look at. This is the first signal, the one that has been around the longest. This is showing options trades and market maker hedging activity in real time for the combined signal of SPX, SPY, XSP, and ES futures. So this is the index signal. There are two lines on this chart. The white line is showing price for SPX, and the purple line is the hero signal. Again, that's HIRO, Hedging Impact Real-Time Options. A rising hero signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. And a falling hero signal indicates they are taking negative delta options positions. They're buying puts and or selling calls. All right, so that is the index signal, showing a pretty strong correlation, especially after about 10:30 for options trades, market maker hedging activity, and price action. Here's the other signal that we can take a look at. This is the equity signal. So this is showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. It's usually typically a smoother signal than the equity signal and then the index signal. So we'll stick with this. All right, so let's zoom in on this chart. And I'm going to change this chart to puts and calls. I'm going to have to jump to another signal, jump back. So the orange line is showing calls. A rising orange line indicates traders are buying calls. Market makers take the opposite side of those trades. They sell calls, and they have to buy stock to hedge their delta exposure. A rising blue line indicates they are selling puts. So the direction of these lines are in terms of options delta. So a rising blue line indicates traders are selling puts, and a falling blue line indicates they are buying puts. All right, so in the morning, traders were aggressively buying calls. Oops. From the open until just before 10:10. So the call buyers took their foot off the gas. Same for put sellers a few minutes later. Price reversed lower. And then the call buyers came in again. Price moved higher. So up and down. Let's just check the index signal. So in the case of the index signal, traders were buying calls from the open and then started to buy calls again. So let's go back to the equity signal. And we'll just look at this setup from the open up until about 10:07. So again, remember the signal was up 9:30 to 10:07, sideways from 10:07 to about 10:25, then began to move down, then reversed higher again around 11:40. So up and down signal. We'll see some much more clear setups and stocks. All right, so let's go take a look at Bookmap. Zoom in. From the open, Remember, traders started buying calls in the S&P 500 stocks. Price move higher. Let's take a look at the order flow in Bookmap. The volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. Kind of a choppy consolidation around the open. Then aggressive buyers start to come in. That's shown by the rising cumulative volume delta. Price moves higher. Options traders take their foot off the gas. 10:07. Price starts to move lower. Then remember the hero signal started to reverse higher. Price reverses all the way down at the 543.0 gamma level. Aggressive sellers exhausted on the way down. Aggressive buyers start to come in. Price moves higher. Confirmed by the rising cumulative volume delta. And then as price moves higher, buy stop orders fuel that move higher. All right, so that's the S&P 500. Let's move on to NASDAQ. Unless there are any questions about the S&P 500. All right, here's NASDAQ. Let's see what options traders are doing in NASDAQ. All right, so just like the S&P 500, there are two signals that we can take a look at. This is the index signal, very, very choppy today. So what this signal is showing is options trades and market maker hedging activity for a combined signal of NDX and QQQ. Again, very choppy. Price here is shown for NDX. Note the 19,750 call wall acting as resistance. All right, the other signal that we can take a look at for NASDAQ, very similar to the S&P 500, is this MAG 7 signal. What this is showing is options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. This is what we'll use today. So let's zoom in on this. Traders taking positive delta positions from the open. Here in this case, they take the foot off the gas right around 10:20, 10:25. Price moves lower. Then they start taking positive delta positions again right around 11:30. All right, so let's take a look at NASDAQ now. And here in this case, price is shown in terms of QQQ. Zoom in. So NASDAQ had already started to move higher before the cash open, finding support at the 478.0 gamma level. Another retest of that level before the cash open. Then the cash open, aggressive buyers clearly coming in, shown by the green volume dots. Rising cumulative volume delta. Price moves up to the 19,750 call wall, absolute gamma strike. Traders start taking negative delta positions, and price comes down almost to the 478.0 gamma level again. Then moves higher as traders start taking positive delta options positions. All right, so that's NASDAQ. Any questions, comments about the NASDAQ or the S&P 500? If not, I'll move on to some stocks. All right, let's go. I'm going to shift to puts and calls now. Well, first of all, before I do that, I do want to compare the MAG 7 signal with NVIDIA. Totally different picture. This is entirely different before the split. Before the split, options trades in NVIDIA pretty much govern what was going on with the Mag 7 signal and the NASDAQ. And now that has changed completely. So the NVIDIA signal is no longer driving the Mag 7. Totally different picture after the split. All right, so let's shift to puts and calls, and let's take a look and see where traders are putting their money today. First is Apple. Note the flat blue line, the put line. Traders aggressively buying calls, shown by the rising orange line. Flow alert comes in just after the cash open. Traders aggressively buying calls. Market makers sell the calls. They have to buy stock to hedge to their delta exposure. Price continues to rise until options traders take their foot off the gas right around noon. Now price consolidating. So traders rotating out of NVIDIA into Apple among other stocks today. So let's go take a look at Apple. Also note 210 is the key gamma strike. Let's go to Apple. And to me, this was a much more clear, much easier read. So the 210 gamma strike, not really in play for today. Note all the aggressive buyers shown by the green volume dots. Not many magenta volume dots. And note the dots do get smaller afternoon after the call buyers take their foot off the gas. Price breaks above VWAP right around 10. Moves up to the higher liquidity levels. This is the heat map and book map showing a history of the limit orders in the order book. Very typical for stock. These orders come in at the cash open and remain in place until they're filled. And it looks like the traders who wanted to sell Apple at 213 and 214, those trades were filled. So again, the liquidity at 213, 214 acting as a magnet for price, and volume starts to dry up as call buyers have taken their foot off the gas right around noon. In the subchart, I have cumulative volume delta that's shown by the rising blue line. I also have the market pulse price change indicator. That's this up and down line. The extremes are shown with bright red, bright green. In an uptrend, these lower price extremes often mark good entry points for deeper pullback entries. Actually, this one right here, and that one too. So this market pulse price change indicator, very valuable for identifying pullback entries in a trend, either up or down. In this case, I'm looking for the lower price change extremes for pullback entries for a long setup. All right, so that's Apple. Khalid, welcome. Glad you're here. Yeah, Khalid, I'll get to NVIDIA in just a minute. Yeah, be glad to. All right, so I'm just going to go through in order that I have things written down. All right, so traders rotating really out of NVIDIA and some other semiconductor stocks into other Magnificent Seven stocks like Apple here, and also Amazon. We'll take a look at in a minute. I'm just going to go through an alphabetical order here. So the next is AMD. Very bearish day in AMD. Let's see what options traders are doing. So again, Apple call buyers driving price higher. Take the foot off the gas around noon. Price consolidates. Let's take a look at AMD now. call sellers driving price lower for AMD. Hero signal was somewhat flat until about 10. Then the call sellers started to come in. The flow alert right before this break below the 160 call hedge wall. That's the hedge wall key gamma strike. Flow alert gives you a couple of minutes of alert before price moves lower at the 160 key gamma strike hedge wall. So net for the day, traders are selling calls. That's shown by the following orange line, negative notional value. They're also buying puts, shown by the following blue line and the negative notional value. All right, let's go back to Bookmap. There's that break below the 160 hedge wall key gamma strike. Price breaks below VWAP. Cumulative volume delta turns lower. Oops. Cumulative volume delta turns lower. In this case, for a downtrend, I want to take a look at the upper extremes on this market pulse price change indicator for pullback entries for shorts. Targets at the levels of high liquidity, 157, 158. Those are limit buy orders. Those were limit buy orders shown by the heat map and Bookmap. There's AMD. So semiconductor stocks weak. Let's move on to Amazon. Incredibly strong day in Amazon. Let's see what options traders are doing. So rotating out of semiconductors into other Mag 7 stocks. Call buyers in Amazon, shown by the rising orange line. Very similar picture to Apple. They are selling puts, but really call buyers driving price. In the case of Amazon, they just keep buying. Note the flow alert that came in about 9:40. 190 call wall, so price oscillated. There's a little bit of consolidation right around the 190 call wall. Price broke higher. So call wall breach. So the call wall is the strike with the largest concentration of calls. For a stock, Spotgamma assumes that traders are long calls, market makers are short calls. As price rises, those calls go deeper in the money. Market makers' delta notional will become more negative. They have to continue to buy stock to hedge their delta exposure. So as traders buy calls, price moves up above the call wall. Market makers have to continue to buy stock to hedge their delta exposure. Very bullish day here in Amazon. Let's go back to Bookmap. The hero signal was a little bit flat in the morning, then really started to get going. Note the aggressive buyers start to come in just after 10. Green volume dots. Looks like the consolidation was actually above the 190 call wall. 191. Price breaks higher. Actually volume increasing, shown by the larger volume dots. Now price trading well above the 190 call wall. My entry point was somewhere around between 187 and 188. And that was for a longer term position. All right, there's Amazon, very, very bullish day. No, Katinga asked, so market makers hedge only above the call wall? No, it just indicates they have more hedging to do. So whenever traders buy calls in a stock, market makers sell the calls, and they have to buy stock to hedge their delta exposure. But they have to continue to hedge above that call wall. So I would not be surprised if the call wall for Amazon rolls higher tomorrow. So we'll take a look at that on Friday. All right, so there's Amazon. Let's move on to NVIDIA now. Here's NVIDIA. Bearish day in NVIDIA. Let's see what options traders are doing. Here's note up until about 10:10. Traders were selling puts and buying calls. This flow alert comes in right around 10:07. That time should sound familiar. And that was a very timely flow alert in this case, indicating mean reverting price action that can often, this flow alert can often indicate a shift from positive delta to negative delta or vice versa. That's what it's doing in this case, giving you a nice early warning of this reversal. Traders start selling calls. Again, this was just before 10:10. Price moves lower, so call sellers definitely driving price. Net for the day, they are buying puts, but the call sellers definitely driving price. Take the foot off the gas right around 11:15, 11:10. Price now consolidating. So again, 10:10. Time to enter a short. Or start to look for a short. As traders start selling calls. Trend line break. Price breaks sharply below 127. Whoops. Price breaks sharply below 127 and VWAP as traders start selling calls. Price moves lower. Falling cumulative volume delta. So traders rotating into Apple and Amazon, rotating out of AMD and NVIDIA today. Bump up the volume dots just a little bit. You're welcome, Khalid. All right, let's take a look at Tesla. Very bullish day in Tesla. A lot of aggressive buyers right at the open. You have to be pretty quick, pretty prepared to catch something like that. Let's see what options traders are doing. Let's go to Tesla. It was call buyers driving price. Let's zoom in on this just a little bit. Flow alert comes in. Right after the cash open. Aggressive buyers, another call wall breach at 190. Again, those market makers Short calls go deeper in the money. They have to continue to buy stock to hedge their delta exposure. Call buyers take the foot off the gas right around 940. Price consolidates. A few more call buyers come in, and then they take the foot off the gas again from right around 10:05. Now call buyers have come in again right around 11:35, 11:40, and once again consolidating. Move up, consolidation, move up, consolidation, move up, consolidation. So price stepping higher with the calls. Note traders are also selling puts, shown by the positive notion of value for the put line, the blue line. All right, let's go back to Bookmap. Move up, a little bit of consolidation, move up, consolidation, move up, consolidation. Remember 190 is the call wall. All right, so rotating into Tesla today. All right, does anyone have any stocks they want me to take a look at? This is what I had on my list. We can let's check some of the other Magnificent 7 stocks. Let's go to Google. Google's been pretty strong recently. Move higher that really didn't continue this morning. After a move higher in the morning, Google. Pretty choppy hero signal here. Let's check Microsoft. So traders are net for the day, buying calls, selling puts. Looks like the put sellers were driving price in the morning, shown by the rising blue line. Price breaks above the 450 key gamma strike. Put sellers take the foot off the gas. Now price consolidating. There's Google, Microsoft. Pretty nice move higher in the morning for Microsoft as traders are selling puts from about the 9:30 cash open up until 11. Let's check Meta. Move higher. A lot of aggressive buyers in the morning. Consolidation starting right around 11. Let's see what options traders are doing. Go to Meta. Looks like, just like Microsoft, the put sellers were really driving price. Call wall breach, 510. Just around 10:15, the call buyers started to join the party. Then options traders take the foot off the gas. 11:15, price consolidates. Hello, Anurag. Welcome. Glad you're here. Anurag asks, was your thesis bullish for Tesla? From analysis, please show analysis. Thanks. Okay, so Tesla was not one of the stocks that I was focused on today, but we can certainly take a look at that. Let's go to Equity Hub. So this is Spotgamma Equity Hub, And this is how I would develop a thesis for a stock. So let's go to Equity Hub, go to Tesla. First thing I want to take a look at is the key daily levels. So this is a 10-day history of the key daily levels. Green numbers indicate the level increase from the previous day. So this is bullish. Hedge wall moved up to 182.5. Call wall moved up to 190. So that is bullish. So just based on that alone, my thesis for the day for Tesla would be bullish. We can take a look at some other information. Let's go to this put call impact chart. This is similar to the absolute gamma strike that we occasionally look at for the S&P 500 and NASDAQ. Orange bar is showing call gamma notional, and blue bar is showing put gamma notional. This is market maker's position. And note both these numbers are negative. So Spotgamma assumes that traders are long calls and or long puts. So market makers would be short puts, short calls, hence the negative gamma notional. Call dominating above the call wall at 190. The lines are showing the rate of change of gamma notional. This is where market makers have the most hedging to do. Somewhere between 170 and let's say 200 to 210. After that, market makers will be fully hedged on either side and will not need to do much hedging. So price should move quickly somewhere between 170 and 200, then slow down. Let's go back and check price for Tesla. Go back to Tesla. All right, so if Tesla continues higher, I'm looking for a bit of a slowdown around 200. Let's go back to Equity Hub. Let's take a look at risk reversal. This compares the price of a 25 delta call to a 25 delta put, and a rising blue line, risk reversal line, indicates an increasing demand for calls. So that is bullish. Implied volatility increases. So demand increases, implied volatility increases. So that's showing an increased demand for calls for Tesla. So that is bullish. Let's finally check volatility skew. All right, so this is the skew line, this dark teal line. The shaded portion is showing the 10th to 90th percentile of skew for the last, or implied volatility. So this is implied volatility on the vertical axis by strike price on the horizontal axis. So this is showing that there is an increased implied volatility, increased demand for out-of-the-money calls, and also in the upper end of the 10th to 90th percentile. So this is showing the demand for calls for Tesla right now is in the upper end of the last 90-day range. All right, so that's bullish as well. All right, so Anurag, I hope that helps. So based on this, looking at all this, my thesis for today for Tesla would have been bullish. And it's definitely playing out here. Go back, check the index. Narrow range now. ES trading between SPY 544 and 545. Katinga asks, is Equity Hub updated pre-market? Yes. So this is based on, most of the information in Equity Hub is based on the open interest data that Spotgamma uses. There's some of these charts. Some of these charts are real time. I believe this chart is real time. I'm not sure about this chart. Yeah, it is. Today, 2:25 p.m. So the volatility charts are all real time. Risk reversal, this is not. This is updated once a day. So when you start your pre-market planning, this certainly should be available. History, this is updated once a day. So the composite view and put call impact charts, those are based on static data as well. They're updated once a day. And then just like this says, live price and Spotgamma levels, this is live as well. So part of this in Equity Hub is updated during the day, and then part is updated once a day. And you're welcome, Anurag. All right, let's go back. You're welcome, Katinga. All right, so NASDAQ also trading in a narrow range. Some stocks moving up, some stocks moving down. Let's just take a look at a few other semiconductor stocks. So a little different picture here for ARM. Moving up, then consolidating up and down around VWAP. That's this line right here. Check Taiwan Semiconductor. So more chalk for Taiwan Semiconductor. So the main semiconductor stocks that I follow, two are not doing much, Taiwan Semi and ARM, and then NVIDIA and AMD both down for the day. And traders rotating especially into Apple and Amazon today, aggressive buyers and call buyers. All right, last call for stocks. Let's just go back. Let's take a look. There are a couple of stocks in the news today. First of all, Rivian got a big cash injection, big investment from Volkswagen. I think it was up pretty sharply pre-market, definitely double-digit percentages. Now it looks like traders were aggressively buying calls shortly after the open, took their foot off the gas pretty quickly. Now price grinding down. So traders net for the day, buying calls and buying puts. CMG, 50-to-1 stock split. Let's go to the total signal. So options traders definitely participating today, and looks like they're driving price for CMG up near the highs of the day. Wave higher, consolidation, another move higher, consolidation, another wave higher, and now consolidation right around noon. Anurag asks, do stocks impact futures prices, or is it the other way around? Isn't futures a derivative of stock price? but it seems to behave opposite. So remember, this is, first of all, the S&P 500, SPX, is an index of 500 stocks. And the price of all these stocks is what drives SPX. So options trades, I don't know what's happening here. Options trades and market maker hedging activity. I don't know what happened. So options trades, market maker hedging activity drive price in those stocks. The prices of those stocks drive SPX. And so traders do buy and sell puts and calls in SPX and SPY. Traditional use of options for SPX is to hedge a portfolio. So large traders will hedge their portfolio with SPX options. And the market makers take the opposite side of those trades, and they'll hedge their delta exposure with ES futures. So options trades in stocks drive the price of the stocks. The price of the stocks drive SPX, and options trades in SPX and SPY, as well as the other stocks, drive futures. So that, that's not a perfect, it doesn't happen perfectly like that all the time, but that's how I look at it. All right, everyone, thank you very much for watching. Thanks for your questions and comments. Anurag, I hope that helped. Hope that answered your question. So I look at ES as further down the line. All right, everyone. Again, thanks for your questions and comments. Have a great afternoon. Remember, PCE data comes out on Friday. We'll talk about it on Friday afternoon. All right, thanks, everyone. Bye.